What's going on, guys? It is your boy Big Rob back in the house. Welcome to Sin City Crypto, broadcasting live from my loft in Las Vegas, Nevada. For some reason, I wanted to say California. Don't ask me why. So guys, welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information and package it up in a fun and sexy way. And then also here at Sin City Crypto, we not only stream with your boy Big Rob, but I usually have a co-host that is not with me today, David. But if you're checking us out for the first time, we do have a two-host show that we do live in our studio, and this is our home version, so just me today. However, I do have a special guest joining us. We have Magic, and so we're excited to have him. He's going to be joining us here shortly, kind of go over the charts. If you're not familiar with Magic from Magic Internet Money, he is a chart guru. Now, we do have 35 people in here. I have no like button here at my house. I apologize. I should have a like button, but regardless, hit the thumbs up, hit the like button, smash the like button, drop an elbow on that thing, and let's get this thing rolling. We got a few people here in the chat. We got Fino, we got Jessica, we got DJ Haas. I think DJ Haas is new. And Taco Berry. So Taco Berry, DJ Haas, to both of you, hola! Welcome to Sin City Crypto. If you are new here, say hello, so that way I can drop an hola back at you. And then we also got Anthony Barbacoa up in here. We got Reed Lanham, Gonzo up in here as well. David's gonna be joining him next week, I think. And then what else we got? We got Brokyoshi up in here, the Cryptic Mushroom, Fino, of course. All right. So yeah, guys, I'm streaming by myself today. So do me a favor, type some stuff in the chat, ask some questions. We did one of these about a little over a week ago, and did a lot of Q&A. For some reason, everybody wanted to ask about my history as a chef. So of course, hopefully we get a lot of crypto questions. But if there's anything you want to know about me personally, or about David, I got the inside scoop on him as well. Feel free to let us know. All right, so let's get into the elephant in the room. The elephant is a full-grown elephant. And it is Bitcoin. It is moving. It is freaking mooning, baby. We went all the way from, let's take a look here. We were at 16,000 a week ago, right? That's the. So yeah, I mean, it was only a week ago. We were at 16,000. Let that sink in. This isn't like I know this was a pretty big run up here, but this wasn't like a giant candle and retracement and like, just basically hitting 22,000 or 19,000, coming back down to 16, 17. These have been sustained growth. If you look here on the chart, you can see that we step up every time we hit these new numbers. Once we cross 17,000, we stayed above it. We didn't wick back down to 16. So you had 16, and then we just traded at 17, and then boom. This was 3 days ago. We hit 18, and we didn't go under it. So we just kept 18 as support. Then we crossed into the 18.8. So we were pretty close to the 19K here. And then, lo and behold, we shot up. We went right from 18.8 straight to 20,000. Now, we did hit 21,000 briefly, but it seems that 21,000 seems to be acting as resistance at the moment. But 20,000 is seems to be a pretty good level of support now. Obviously, we do know that nice big round numbers are huge psychological numbers and act as extreme support and resistance. So it is a good thing that we're above 20,000. And now at this point, as long as we can go, I'd say 2 3 days at 20K, I'd feel comfortable saying that at least in the short term, the bottom is in. Right now, there's lots of talk of us having a bear trap here, and that this rally is just to bring some dumb money in, the FOMO in, and then it's just going to retrace back down to 16,000. Very possible. However, the landscape on the macroeconomics and what's going on in the general economy, the stock market might not be performing as well as some people might have hoped. However, the crypto markets is performing pretty damn well in comparison to the traditional markets. And I will say that I think a lot of it has to do with the federal funds interest rate, which is slowing. And I do believe that we'll probably get a 0.25% interest rate hike this coming one. Inflation's coming down. And so a lot of the narratives that people have been circulating as far as the Fed seems to be falling in line for a favorable rally on the high risk assets, your tech stocks generally, and of course crypto, Bitcoin. All right, so taking a quick peek at the chat here, we do have we got Jason up in here. Jason Squires, what's up, brother? We got Camel Toe Trucking, and then Mark Gonza as well in here. So thanks for everyone for checking us out. We are at sub 50% like ratio, so make sure you guys hit the like button. And then, so I do want to say here we have, let's see here. I want to show you this. So, big number here. Just in, global cryptocurrency market cap reclaims $1 trillion. At the height of the market, this was over $3 trillion, but we were as low, I think, as $700 million on the global market cap. If you look here at coinmarketcap.com, it has not updated to the 1 trillion yet, but this was pretty low. So good to see that the money in the system is rallying back. And then what else we got here? Some of the biggest gainers and losers. We have Compound up 38%. Solana on a straight tear right now. Solana is up, let's see, 34%. And Helium up, Decentraland, Near Protocol. Everything is in the green right now for the most part. If you take a look at the biggest losers, Gala is down 7%. This has had a monster run up, over 100% gains. Went from 2 cents to 5 cents all in 1 week. So even though the markets are rallying, a little pullback for Gala. So yeah, a lot of bullish news coming out of the Gala ecosystem as well. They have the launch of the NFT music store, and also they're focusing on mobile gaming as well. Now, let's see here. We also got Kevin Cortez in here. Hola! Welcome to City Crypto. We also got Magic on deck. He'll be on with us in just a moment. And then let's see here. We got some of the. Okay, actually, I think that's all I got there. Yeah, you know what? Let's get right into the charts real quick. And so before I get into any of the articles, maybe we'll get a little bit of a analysis and a breakdown of crypto. And who better to help us out on that than Magic? So let's bring him in. Magic, what's up, my dude? Yeah, do you hear me over there? Magic. Shoot. Okay. You guys hear him? Okay, I got.
I was muted. That's my bad.
Okay, cool. All right.
Total boomer moment on my part.
Oh, you're good, brother. So hey, man, thanks for joining us on this last minute stream on a Saturday. Much appreciated. How you doing, man?
Oh, dude, busy day, man. Doing stuff with the kids, getting some meal prep done. Bitcoin finally let me do some other things outside of sit there and stare at the chart, go straight up.
Mm. You making some money on these moves or what, man? You got some
Oh yeah,
trades in
man.
here?
I've been long. I've been vocal about it. I said I'm not closing this position. So I was tweeting that out on like the 4th, said I've been looking for the long, and it finally came. So I didn't get the exact low like some of the guys on crypto Twitter. They're saying, hey, I caught the exact low. And if they did, great for them. But I did get an entry and took some profits up here around 21,296. So.
All right, well, cool, man. Um, so yeah, let's just get right into the charts.
Yeah,
If you
definitely.
don't mind, I also got a little split
Pull
cam
up
here
this.
for us. So, yeah. Whatever you think, man. Maybe
Sure.
a grand thesis as well. Just kind of, I know a lot of people are thinking like, hey, man, are we in a and I know this is all all
Are we back in
numbers
the
and
bull market?
probability, but like kind of, what's your vibe? I know a lot of people are thinking, hey, it's a bear trap. This is unsustained. Hey, we're gonna hit lower, or hey, man, it's the start of a new bull run, and So yeah, what's your kind of vision on crypto in the grand scheme of things, and then yeah, what are the charts telling you on Bitcoin and price movement? We'll discuss some tokens, guys. If there's anything you guys want Magic to cover, just drop it in the chat. We'll try to get to most of them if possible.
All right. Yeah. So definitely. I mean, we talked about this move on your guys' show back in December multiple times. And what I was doing was comparing this structure here, where we spent a long time going sideways, very obvious downtrend, breaking down. Everyone's looking for specifically 10 to 12K, right? So we had something very, very similar to that over here back in 2019. I know I'm kind of like beating a dead horse here, but this was the China pump right here. And I remember trading this and sitting there looking at my phone as it was going from $7,200 all the way to 10,000, like 400, all in a day or two. And I had gotten out at 8,800 because I was long. And I believe that's where like the 200 MA or something was at the time. And I had gotten out of that position and just had to watch as this thing just kept ripping, right? And so I kind of made this thing where I was like, okay, if I ever get the opportunity to trade something like this again, I'm not going to mess it up. And so I'm pretty happy with how things turned out. But the similarities in this. So you had on a quarterly basis, and we talked about this previously, just to kind of start it off. You can come in here and start looking at this move from a quarterly basis, and you can say, okay, where is my quarterly low right here before that sell off happened. So I'm going to make this a thicker white line so you guys can actually see it. This is your Q3 low right here. So you can see that's an important level. Once we get back above it, you get this rise in price. And then you're going to mark out your Q4 open. These are just the most important levels on the chart as of right now. And they're going to set up a base for you to like understand what a deviation looks like. So you go back to the daily now and you see these levels on the chart, and everyone's looking for $6,000 at this point. I tried to put this in context for people on Twitter, but everyone wanted 6K back here. We were all expecting it. You had this massive descending triangle, right? Just like we just had. Everyone wants $6,000. Instead, you got 7,200, and you started reclaiming some of these like high time frame lows. And these are just meant to be areas so that you can mark on your chart and know where you're at. And so I usually box them off. And as soon as you get back above here, this was a bit of a short squeeze, but both moves were very similar. This one came and filled an inefficiency, just your Q3 NPOC, right? So you're just looking for the volume profile. Where's my highest volume target? A little bit different on this one because this one doesn't necessarily, it spans a little more time. You don't have these like quarterly inefficiencies in terms of that. You have this giant move down though from the top of the structure, unlike over here where it did, the breakdown started towards the low, right? So one would expect you to come back up and fill this inefficiency in, and you're just targeting this most local high. And what we were talking about on the 14th was, when do we get bullish again in terms of when is price, like when do we have a bottom and a market structure change? And you have to make higher highs and higher lows. And on a daily time frame or any meaningful time frame, it's going to start at 21.5. And so you had to know that you were coming up, going to backfill at least this candle. And then what you have at 21.4, I think it's 21.296. The reason I chose that level is it's probably hard to see, but you can see this candle high is 21,296. And at the open of this candle, meaning it closed right here below that level at 21,295. So you actually had a little tiny $1 swing failure pattern of these daily highs. And that to me was what I call a breaker level. So that's why I took profits there. So this was something that where when you map out your Q3 low right here and your Q2 low right here from 17.5 and 18,090, You can see the base. You can see we came up, back tested it, and then once breaking above, this is what you're reaching. Now, this move did not start as a short squeeze. And what I mean by that is everyone was saying there was no way to know how to get long on this. And I kept referring to the move as there was no sign of weakness. And so what I mean by that is when you get seller exhaustion, this is the place it's going to occur, first of all, down below the range. You get seller exhaustion because you have to have a buyer and seller to have a transaction, right? That's just how the order flow and the order book works. So if somebody wants to buy Bitcoin, but there's nobody there to sell it to them, what will happen is price will seek out the next available seller on a market order, right? So it has to go higher to find that seller. But if another person wants to buy Bitcoin and there's not enough sellers, price has to keep going higher until it finds someone willing to sell their Bitcoin. And that's how you get moves like this that occur. You know, that's the general thesis behind it of how moves like this start getting out of hand, because people are buying, but there's just nobody selling at the moment. Now, you did start getting sellers about 19,150. That did change. You had people just coming in trying to short every single high. And then they became, not only were they becoming extra fuel, you still had people buying. So it became a double-edged sword right about here as it started breaking back to the upside. Now, the reason I haven't closed all of this trade, I've taken profits on it. There's, about 30% of the trade is still open. When I do take profits, I trade inverse perpetual as well, which means that as soon as I close that leverage position, it puts me right back into spot Bitcoin. So I'm not missing out on any additional gains. I'm just not leveraged with that asset, that amount of that asset anymore. So in this instance, when you look at this, this is an overall range still. So we've done two things that are important. If you were to take the last 6 months of price, I'm going to clean this chart up just a little bit here. And we just look at this from where we came down and made our low, which was about June, 18th here. So we know that from June 30th to December 31st is the last 6 months of the year. I call it the 6M2 because it's the second 6 months of the year, right? It's important to track things this way. So that pretty much encompasses all of this price action though. So if you were to take the average of that price, you actually get $19,059. So if we put that number on the chart, 19,059, well, if I can get my mouse to work here. What you're looking at this number for is this is the average of price for this entire section. And the reason that's important to note is, one, this is a mean reversion, which is this is where everybody started shorting, which makes sense. However, blindly shorting things is never going to work out well in the long term. Eventually something like this will happen. It'll work out for you pretty well, a good majority of the time actually. But the issue is that if you lose everything on the times it doesn't work out, this happens. But you've reached the average of price. What you want to see is, are people interested at paying for this asset at that average now? And if they are, it means people will probably pay more. And that's when people become interested in selling, is when it's above the average, right? Very simple concept, but that's why you mark those levels out. So that's why this was a really big target. It was also, if you looked at like the overall volume profile on the 40 tick, which is what TradingView is showing you, you could see that this was going to be your point of control, right? So the area of most volume. If you went to ATAS, a different charting software, they do like a 1 tick, you would actually see that this was also the time point of control, meaning that this is the exact price that we spent the most amount of time at. It's the average of price from this entire section. So you knew you were probably coming to back test this level at some point. I believe there's a gold pocket here as well. It worked out really nicely on a 1-to-1 in terms of time. But it didn't mean you should short it. And that was one thing I kept trying to drive home when I was on debate, even on Thursday. I was on there with some other great analysts, and they were like, I'm ready to short this rally. And I was like, I'm actually just going to long and chill because there's been no sign of weakness. There's no reason to short. And you've come up back to some really key averages yet again. You'll hear me say averages a lot because I believe everything should have some kind of a mathematical basis. We shouldn't be guessing here, right? We should be working off numbers that are concrete, and we should know why they are. So I think I have them.
I think it's kind of interesting how that U-shaped pattern that we just came out of was essentially the downward fall was the FTX insolvency and collapse, and we are right back where we were. So, I'm not dug into the charts like you are. So for me, I'm thinking, oh man, you know what? Probably the fear from that has washed out, and this, essentially 20K might have been the bottom, and this was just
Could be.
some overreaction due to the FTX news, and now we're back at where the support should have been at had that not collapsed. I don't know. I mean, that's just kind of my little
No, I agree
analysis of that.
100%. From a like a investor standpoint and a sentiment standpoint, people have to be very excited about this, especially if they were still holding. And I would say be careful for that because we are at an area where people are going to be taking profits. But yeah, no, that it's Bitcoin, and nothing ever surprises me. And I always go back to here because I remember trading these sections of the chart. This is when I started trading like full time, and I'm like, okay, I'm profitable. We're in a downtrend. I've figured out that this is still technically a bear market, but
Hey, imagine,
this sentiment
yeah,
right here,
dude. I was just about to say, hey, look at that. That looks exactly like the pattern we just went
yeah,
through. What was
yeah.
this?
So
The 2018?
19,
That was the
yeah,
2018, 19.
2019 14K top. We talked about this
Huh.
the first time I was on your show. I brought this up, and I've been bringing it up since we made that dump because everyone wanted those lower valuations, including myself. I was like, okay, well, we're looking for lower until something tells us not to. And we finally got entries on why we should be looking for higher price. But what the key was is you didn't get continuation off this. You spent a little over a month going sideways here. And we spent about 2 months. And I remember saying, if we haven't made this move by the middle of January, that I would start to expect this to be potentially at least a run it back to 19,150, and then we'll evaluate, could we come up as high as 21.5, and maybe higher over time. Because now you look at this and you say, all right, where's everyone's stop losses at from this old range? Everyone
But
that shorted
now,
up here,
yeah, the scary thing though is if it does follow that same pattern that you had
and
in
it
the
rolls over.
2019,
Yeah.
it looks like it's going to be
Yep.
heading.
Here's what's even worse,
Okay.
man, is that was actually the largest single day pump in Bitcoin's history. It was like 42%, if I recall. I actually mapped it all out because it was something I was going to cover in a static video at some point. It was the China pump, though. This is when China unbanned Bitcoin the first time, for anyone that wasn't around back then. And we
Yeah.
say the first time because they did it multiple times, but caused a 44% pump that day. And I remember going on our live stream, on Leading Crypto, and I was like, if we had a similar move, where would it put us? And it put us right back here. So the China pump, I say 2019 part due because you got to label it, you got to know what you're looking at, and it's
Yeah.
39% over the course of just a few days. Now, this is a little bit longer accumulation, but the move itself is very impulsive. So, like, to think that there won't be a pullback, I think it's more than likely we'll get one. Now, the question is, when does that pullback become more than just a pullback? And that's what we can do real quick is, okay, if this rally is going to be just like 2019, we don't know, but we should be able to delineate where we're ready to make that assertion. Okay, now it's not good for price. And to me, I think 19,150 is a really great level to be looking at. You can see why right here. This is just an easy area of support and resistance. But if you wanted to get very, very technical with it, you would be looking at this pivot right up here. You would just be saying, okay, this is going to be the zone I want to be hanging on to because this is where everything really originated from. So I'd really want to extend this to the left and to the right and just say, okay, does it make sense for this to be the support we have to hold? Yes. From a very technical standpoint, you could wick down this low into like the high 17,000s, low 18s, and technically you still haven't broken the structure yet. And this would get people pretty bearish. I'm not looking for that. I'm not calling for that. I'm just saying, if that move arose, you guys should understand and like have some level of, I wouldn't say, maybe a lack of a better term, competence in the chart and say, okay, this is what we were expecting. If this support holds though, I should be looking at this maybe opportunistically. We have to kind of like read the reaction at that time. But if it doesn't occur, then we just knew it was there. We had our invalidation. We never had invalidation to lose our upside momentum, and we're good to go. But yeah, if you lost this level all the way down here, and I think early signs of weakness is going to be 19,150, obviously, which isn't too far away from this area at 18,375 to 17,804. But if you start losing these areas, I mean, you'll probably make a new low because these lows are not swept at all. These are generally, you want to see these lows be taken, but doesn't mean they have to be. You can go a long time without taking lows. Like this low right here, I started calling for the low of our prior range to get taken the day that we made the low almost. And the reason was there were just some factors that came in on the weekend. CME was closed. It's considered a poor low from an order flow standpoint. So like we knew there was a high probability at some point during CME hours, we were probably going to come take this low. But it took almost 6 months to do it. So like that's just the thing. And the same thing happened at 32K. We said the same exact thing at 32 when we were looking for 47. It was one of those things where we knew this low was very likely to be taken. And it was just because when you looked at it and you understood how things were setting up, you knew that this was probably going to be something that ended up taking it, but it ended up taking months, and that could very well be the case here. Or this could be, as you just suggested, the macro low and we're all in denial. And so that's why I chose to hedge long. Like I still hold my shorts from all the way back up here on this move, but I have taken a long position because, I don't have a crystal ball. I'm just a guy who charts and tries to position himself the best that I can in the market. And it made more sense to start getting long right here in this region. And so I've done that. I've taken my positions. If I'm wrong, I still have, a dog in the race up here that's going to keep me getting paid. And I'm still hedged against downside. However, I am ready to cut that position. And I think that if you looked at this just objectively, you could just say, if we start breaking back above this range, especially this local high probably right here, you're going to see 23K. I don't think it stops there though. I think you take 25K as high at some point and you probably head all the way up to 26.7, 24. And then we start to play the game from like prior years. I'll go to the BLX for this, where this has been a very common thing that's happened before. Let's pull up the yearly pivots actually.
And then I'm kind of glad you brought up the fact that you were in a long position, and because I just wanted to talk about total liquidations. So just a quick intermission here. We'll get back to the charts in a second. We did have on the charts here, we had on the 24 hours almost a full $1 billion liquidated, 717 million. A lot of this was coming out of the Ethereum chart here. You can see that we had we had $264 million worth of ETH, more or less longs liquidated, and you can see the majority of this came off of OKX, or at least almost half of it.
Wow.
Binance had a lot as well. So more liquidations in Ethereum than in Bitcoin. Does that, first of all, surprise you? Or are there just a lot of traders in Ethereum lately?
Ethereum's been a really popular coin, and I kind of knew it would be because last cycle it was my best performing bag almost. And it's showing a lot of relative strength compared to the rest of the market and the altcoins. It didn't quite take the dips that some of them did. Like everyone thought this thing would be down at like $600-700 by now, but it's been holding on to that $1,000 zone, and it's looking like it wants to rip higher.
Yes.
So I imagine there's a lot of people that were hedged short if they got liquidated there. I mean, Ethereum was like the only altcoin that was really ripping outside of, what was it? AVAX was ripping pretty hard. Solana's ripping hard.
Solana, Gala, AVAX before this big rally was really performing well, and outside of that there wasn't much. And the avalanche was just simply because of the partnership with Amazon Web Services for their enterprise blockchain, which I still think is a super bullish. I'm surprised that the price didn't rally more than it did. So what's your kind of if we're gonna get into longs, what is your kind of trading view on this? I know you're kind of discussing it, but if you had to lean one way or another, put in a new long or short position, are you more inclined to go for a long right now, or in more the 1 week window, I would say?
Yeah, I mean, I'd be looking for opportunities, especially if I didn't think that this was going to end up like 2019. You just have to understand the invalidation we just talked about, like 19,150, for instance, or 19,059. It's kind of a zone, but locally, these are the three levels I was going to show you on that other chart, but they weren't there. So these are just really high time frame averages. This is a 60-day average. This is the entire year of 2021, and this is the Q4. They all come in this region. And when you go down to like the low time frame, like we're talking the crackhead, like a 5 minute, this thing has been giving you the levels you need to like work off of for day trades. But what you can notice is that if you lose 20,434 right here, where this last local low came to and this wick came to, you're probably going to make that trip down. And I would anticipate to probably challenge this local low down in like sub 20K. Right? That's what I'd be looking for right off the rip. And those are the areas that if I'm interested in a long, I would be waiting for the reaction. I only say that because you don't want to end up on this side of things like over here where, price it came up here, it made a high, it just rooted around for like a week and then just started collapsing all the way back down to the bottom side of the range. Like, you don't want to buy right here on the dip and be like, all right, I got a good position. And then it just keeps dipping and you hold all the way to the new low. And then what really stunk was it came down here. It finally hit that $6,000 mark, put in a nice rebound. I remember everyone was saying 3K and it went back to 10.5. Then everyone's saying 20K and then it ripped all the way down to like, 3,800. So that's the only thing is if you're looking for a long, which I'm still looking for longs, obviously I'm holding it. You know me, I'm always neutral, but you want to see something like this where if it gets set up like this and you spend a good amount of time up here at the high and it breaks down, that's when you want to be wary of looking for those positions because it spent a lot of time building that momentum to the downside, like a big range. So if you spent, the better part of a week or two up here between like 20,400 and 20,000, 2 or 300 or 21,002 or 300, and then it starts breaking down, you're probably going to start seeing these like 19K numbers and maybe even a challenge back into this zone right here, which this is technically your quarter one, so the new pivot for this quarter. So the average price you need to hold, and you can see exactly where it comes in at, right where we were just talking about on a structural zone. So the math even supports that if you start losing that area, there's going to be problems. So you don't want to be buying up here and then when it starts breaking down, holding all the way through these levels because it can get out of hand. But I am favoring upside over the immediate long term. The reason is there's more magnetism to the upside right now. It makes more sense to me to go up because you do have these stops above these local highs to be taken still, and you have your overall average from the prior year right here, which is hit at an over an 80% rate. And that's kind of what I was showing you right here is this is actually 2015. And so this is the average that was printed after you had made your low right here. We'll get out the brush. So this is your low, right? You spend some time below 310, which I need to get rid of this line. Just a second. You make your secondary low. What did you do? You went all the way back to your average. You actually didn't formally touch it. You got really close, and then you pull back almost 50% off of this level. So you get really, really close, 50% pullback coming back to that yearly average, which you can see the yearly average is touched, basically touched here. Now it's support. This is your low for this entire year right here. These are really important levels to have on your chart, and you can see right here, this is exactly why I was looking for 47. Again, there's your rejection on the rebound. So everyone that missed the short up here got a second opportunity right here, and it was glaringly obvious. Now, we'll know if we're going to get a 2019 style market. As you can see, the average was well above price. What does the price do? Magnetism, in my opinion, straight back to it, consolidates on it, and then pushed even higher to the gold pocket, which means, in that scenario, you have to be aware that you could come all the way up here to this level and then push above it. But if you come back to it and start chopping around, that's when you know that you're in this larger accumulation range, and you're going to want to start figuring out how big is the range, and do I want to be buying below $7,000, $6,000 and accumulating down here, or am I happy to accumulate this entire move anywhere from 14K all the way down to 3K and just take the average? That's what you're doing at that time. I hope that makes sense. And it's kind of, I tend to move really quickly through this stuff, but
I know you're kind of referencing the, either way, for what I was kind of taking away there was if we stay right at 20K, like for a week, you're saying that it's more likely to break to the downside versus if we get into the 20,800, 21,000 maybe.
You want
to
see
the further away you get away from the 20K is probably a good thing,
good.
Huh? Oh, not good?
Probably not. Okay. The further away we get, probably not good. I would like to see this. If it comes down, I want to see a very quick move down. I don't want to see it be very when you look at this move right here off of this local high, one thing you're going to notice is how it's not, it seems fast when you look at it like this. However, it's really not in the scheme of things. Like this is a fast move down. This is a fast move down. However, up until that point, it was just very methodical. It was just being marched down. You don't want to see that. That's someone selling the price down. That's where bigger entities are coming in and people are trying to buy still because they're excited. And all they're doing is just moving their sell walls down and just crushing price until finally what happens? There are no more buyers. And we just talked about this. Now you have buyer exhaustion. and there's no one to buy. So as these guys are trying to sell, the price is going to keep going lower until someone finds enough value to buy that order. And that's how the market, is determined.
Yeah.
It's market buys and sells. And so that's how you get these lows. But you don't want to see it doing something like this where it's just very like, okay, we have a high, a low, a lower high, another lower low, a lower high, right? You don't want to see that just methodical march down. Now, if you get like a really quick wick, and what I mean by that is something like this. See how this is just straight down, get a nice reversal candle and up. So straight down into support and then up. Even though it formed a lower high, that's a good place to be looking for a buy because you can see how quick it's happening. You've got a really strong reversal here. And, if you went in the order flow or whatever else, you want to see other confluences, but that's what you want to see if you're looking to buy a dip like that. So it probably will be quick. That's why I say presetting can be dangerous, is because you don't know what you're going to get. But, it's just like right here when people were saying that this was the bottom. This is, these are lower highs and lower lows across the board. And all you were waiting was for the floor to give. And then this is a really impulsive move down. And so there's a couple things to take away from that. You get a really fast move down and then 2 months of consolidation, right? What do you think is going to happen when you break back into that area? Well, it's going to fill very quickly. However, you've got resistance up here. And obviously the BLX isn't up to date for the day, but you've got resistance up here. But if you crack it, and I think if you get that move in the next week or so, which is what I'd like to see, if I see a move to like 20K, I would like it to be a quick one, like just a quick drop down and then go, right? Something like this where it drops down, maybe gets one more low, takes a key low maybe, and then you're off to the races. If you spend time up here doing something like this and then it goes like this, though, you don't want to see this. This is bearish market structure, and it's literally forming a parabola to the downside at that point. That's what you saw in 2019. It's kind of tough to like say, and this is what we're expecting, because no one, even myself, I wasn't expecting to see in 2 days to do 40%. Or 3 days do 40%. I just knew I was long and that these were eventually going to be my targets. Sometimes timing is what it is, but I will tell you, you can time the market, somewhat accurately. I'll show you guys a little trick. Let me get to a clean chart for this. This is something I did in 2021. So when we got our big move down, right? Or big move, down on January 8th, I knew this was going to be a larger range because time had basically said so on Fibonacci from our macro cycles. Now you've got your range low and your high established all within the first 6 months of price. Okay, so we're dividing things up by time because we can put a constant on it. So we already know what time frames we're interested in. We're interested in the daily, the weekly. We're interested in the monthly, the quarterly, and the 6 month and the yearly, right? Those are the time frames that matter. And so when you're using tools, you can oftentimes use those as constants so that you don't have constant variables, and use those to gain information into what might be going on. And so I use the sign line for this. And this is a tool that's just measuring if you were ranging, what is the rate of change, right? So this is what we were expecting. So once we had this, pretty much time to the low, time to the high, time to the next low. And then right here, you start breaking your trajectory. And what you will notice is this actually gets respect from price action as well, which I find interesting. But so I did that with what we have going on here a couple weeks ago. And if you were to be doing that again, all you're looking to do is something like this, right? And you're looking to take this, and I had changed it to 18,375 as the high and moved it on over, and you can see you're coming into it now. Now, if you take this one step further and you say, okay, that's a nice, look, you can now do the same thing for the downside, and you can start looking at this for time and saying, how long will this rally potentially last? And when you look at it this way, it's got you all the way out in the middle of February. So if this rally is going to be similar to what we got back here, where we rallied up to the yearly average, right? That's all this was a mean reversion play, but it took 2 months to play out. You've got a very similar timeline potentially, because this is the high from your second 6 months of price in August, right? This is the low because it came in 2021. So in that 6 month window, in the last 6 months of price, if we gauge the same kind of volatility on that timeline, we can say we should be expecting a peak sometime in February if this move has got legs. So I would anticipate that we do still have further upside to go. It just, it's not always straight up, although this would beg to differ. But it's kind of it's a neat way to look at the market. A lot of people, when they see it, they're just like, what the hell is this guy talking about? But that's how I do some of my times. It just makes sense to me to do it that way. So
All right. Well, real quick, I want to get into. We'll get back into the charts here in a minute. Maybe
Mhm.
cover some altcoins. And guys, if you guys wanna any altcoins that we want to take a look at, just go ahead and put those in the chat, and we'll get to them before the show's over. I do have a few new people in the chat. We got Kent Parrish. We got Scorch Cycles. And then we got Wick589, Crypto Addict, Michael James Reagan, 214 Thugger, and Armand Clark. To all of you, hola! And Chemistry Bro as well is here. So, yeah. So real quick, I'm going to cover a couple articles here and maybe get your discussion, your thoughts on. I know you take an interest to macroeconomics. We have the Treasury Secretary Janet Yellen has come out and she said U.S. debt ceiling will require Treasury extraordinary measures to avoid default. So I know default is kind of a scary word when it comes to the U.S. economy, but we've been in this position multiple times, and usually we just raise our debt ceiling. It's usually the par for the course here. But real quick, I'm just gonna little highlights here. So Janet Yellen disclosed a debt bomb on Friday, noting that the government will reach the debt ceiling on January 19th, which is now $31.38 trillion. Once the limit is reached, once the limit's reached, Treasury will need to start taking extraordinary measures to prevent the United States from defaulting on its obligations. Yeah. So, like I said, this is not a first. This is not uncharted territory. This isn't the first time we've been here, and yeah, I'm sure they're gonna argue in Congress, and then at the end of the day, right when remember when they always close the post offices and all the government buildings are closed for like a week, and then finally everyone's up in a roar. They just finally are like, okay, we'll just raise the debt ceiling, more spending. So, um, what's your kind of take on the Treasury and perhaps these fears of default and Janet Yellen discussing the debt ceiling? Yeah.
I feel yeah, it's kind of like you alluded to. Every year, every other year we do this. It seems like it's all very political. Um, they're not going to shut the government down, in my opinion. It's just one of those things where they can't default on it, and I don't think the Fed can allow them to at this point. So they're going to come to some kind of agreement to keep things going. It's just a matter of when they do it and if they can. I mean, I say that even though it seems like Congress and everything's getting more divided. I think the two-party system is already broken, but it's even more flawed now because they're even further apart. They're drifting apart. In fact, no one's coming together anymore. But yeah, I mean, it's a headline for sure. It's just I don't put too much weight on it because it's kind of like the boy who cried wolf to me at this point. We hear about it every year, every other year, and it's just like they're going to raise the debt ceiling. It's the type of economy that they're running. It's a debt based economy anyway. It's just they're completely abusing it. I do think that they're going to need to eventually try to scale back so that they can run a surplus for at least a few years. I just don't know if that's possible in the foreseeable future. It's just one of those things where we'll see what happens. We're definitely not going to get it out of the woods like we have
Yeah.
now and have had.
They keep kicking the can down the road, and it's all going to implode eventually. Now we are the world reserve currency. We are the
For now.
most we're the most stable out there. And so if we were to default, which we're not, but if we were to default, put the globe in probably into a depression, and then we would essentially have to reorganize a new world,
New
order
World
as
Order.
far, yeah, and somebody else would step up as the world reserve currency or the go-to issuer for
That's a good
monetary
point,
trade.
though.
But the thing is it's like the globe ain't ready for that. I mean,
No, you make a really, really solid point. The amount of countries that hold US dollars or hold US debt in dollars,
yeah,
if the US defaulted on that or the dollar, something like that happened, it would be catastrophic, not just here, but like everywhere.
Oh yeah, it would set the globe back probably 10 years financially easily, if not more. Um, so I mean, yeah, I think it's a doomsday scenario that I think a lot of analysts like to just to poke at, but not anything that's probably realistic going to happen. But eventually, the system will break. It will get over leveraged, and usually it'll probably come from smaller nations. Then they will essentially domino over, contagion will spread, knock out other nations that are, and eventually it'll trickle down to the U.S. But hopefully not within my lifetime. But that's why we're in crypto,
El Salvador
ladies and
would be
gentlemen.
laughing at us.
Yeah, that's why we're in crypto. Also, a couple other, if you were watching our show yesterday, and also I see you guys putting these tokens in the chat. We'll get to them in a little bit. I do want to say OC Pet Doctor, Farouk, DJ Haas, Toronto Golf Scallywag, Hola, and I want to. So in Congress, the House of Republicans, check this out. So yesterday we were actually talking about this subject, and we have here. Okay. So we have here the Republican lawmakers announced late Thursday the launch of a new subcommittee that will oversee crypto and fintech industries, the first of its kind in the U.S. The French Hill of Arkansas. Or Arkansas, as some people call it, so the French Hill of Arkansas will chair the subcommittee of digital assets, financial technology, and inclusion, which will be part of the House Financial Service Committee. Bipartisan effort. Key word here, bipartisan, is needed for fintech innovation to flourish safely and effectively in the United States. Hill has been an enthusiastic supporter of the crypto industry. So the chairman is going to be someone that is bullish on crypto. So that's one takeaway. Bipartisan is another. And, we discussed this yesterday on our show. And, we're catching a lot of friction. There's not a lot getting done or a lot of movement in Congress when it comes to regulation, and a lot of it comes from the lack of infrastructure for getting the bills in front of Congress. And so what we've been seeing lately is that you have one politician taking the floor and saying, I'm introducing a bill, and then half the room not agreeing with it, and then they go rewrite it, and then all of a sudden it's not trending anymore, and it gets lost in the shuffle, and nobody, until something breaks, and they bring it up again, like, I propose a bill, and then, anyways, we have this in our normal government as is right now, is that we have a housing committee, oversight committee as well, finance, food, drugs, like every major sector in the U.S. Has essentially a committee or a board or just a group of politicians that can work together to get everyone's insight, get people on the committee that are experts in said field, and then they can propose legislation that way. It's just a more efficient way for our government, because there's so many different politicians. The House of Representatives has like 200 something people. The Senate, it's they don't get much done. So I think this is bullish. Now I know some people push back on the whole regulation thing. I think, yeah, at least
FTX, like, you have to have it.
At least in the institutions that are offering custodial services and returns and yield, we should at least know what kind of risk the institution is taking. Like, if you're getting 20% yield, where are you getting it from? You know what I mean? Like, if I wanna take the risk, fine, but like, at least give me an inclination. Like, hey, I have all of it staked in Terra Luna. You know what I mean? Like, hey, like, it's all in Lido. Like, make it apparent so that way I can judge for myself. The rest I want to take. Now, what one big takeaway on FTX's collapse was that this wasn't the fault of crypto at all. It wasn't a fault of blockchain. It wasn't a fault of code. It was just the fault of the institutions and just greedy and irresponsible just humans. And so that's kind of the reason that I got into crypto myself, was just because I got kind of tired of getting taken advantage of by institutions. So hopefully this new committee will bring about change, at least in the centralized intermediaries that custody and stake crypto for us. Staying on some government and things of that nature, we do have New York sued by environmental group after approval of crypto mining facility. So if you haven't been keeping up with New York, they're pretty they're pretty
strict.
Yeah, they're pretty strict. They have the bit license, and so it's difficult to buy and sell crypto. They're also against Bitcoin mining, and so unless it comes from 100% renewable energy, you're not allowed to do Bitcoin mining in the state of New York. They do have the hydroelectric dam up there for the Niagara Falls region. So anyways, the plaintiff claims that the approval violates New York's climate law of 2019. The Climate Leadership and Community Protection Act sets the goal of reducing 85% statewide emissions by 2050, and their ultimate goal is that zero emissions of electricity by 2040. So, do you got anything you want to expand on this? I think it's just kind of a, just. It is what it is, man. New York being stubborn, and
Yeah, I mean it is what it is. The states are going to do what they're going to do, especially like New York and California. They're kind of in a league of their own. And then you've got states like Texas, that are like, yeah, bring it down here, let's go. Not to get off on too much on it, the whole like Michael Saylor rant, but I do believe in the fundamentals of Bitcoin. I do think that as a sound money idea, that something like Bitcoin, or even as an asset, will breed innovation and breed a more efficient system, because they have to be. If it's cheaper to go with renewables, they're gonna use those because it's a profitability thing. The companies will. So over time, as much as we hate to say it, the corporations and those large entities that are getting involved to mine Bitcoin on large scale for profit, that's the direction they're going to go, and that's a good thing. It's just, it takes time, and there are going to be states like New York and California that try to, be the catalyst for that. Whether people want to look at it as they're trying to shut down crypto mining, that's one take. But the other take is, well, if you want to do business here, you guys need to go ahead and take the next step and do it this way, which, maybe it's not feasible because of the infrastructure, whatever it is, but I think it's heading that way anyway. Bitcoin's not nearly as bad for the environment as a lot of people make it out to be. I think that's a claim that's been made a lot. I don't have all the numbers in front of me, but it's been dispelled numerous times. Excuse me. So yeah, I mean, they're going to do what they're going to do, but I don't think it stops Bitcoin. If anything, as Bitcoin starts to permeate more into that state underneath those laws, it's just going to make it stronger, over time. So to me, it's just,
Yeah.
it's a matter of time. It really is. I don't think anything slows it down.
Yeah. Yeah. I think there's a lot of FUD around Bitcoin's energy usage, and a lot of it, really comes from the fact that you can centralize all the data, and so ask somebody how much energy, a banking system uses. Like, good luck even aggregating that data. How much does ACs use? I know that's a big number, but how accurate would that be? How do you know how much energy percentage from a house's usage comes from AC? It's an assumption. You know what I mean? Like, it's more of an educated guess. But I mean, the beauty of Bitcoin is that, like, hey man, everything is here in front of you, clear as day. The numbers are there. The blockchain itself is transparent. You can you see every transaction on there, but you can also see from top to bottom how much energy is used to secure the network. And is it a perfect system? No, by no means. I think that there is an arms race between the mining companies, and basically you're incentivized to buy more and more units and outpace the competition. You could say that a lot of people say that's a good thing because it creates more security in the network because it outpaces the amount of money you have to put in. Zero incentive to attack the network. So it is what it is, but is it a flawed model? I think it could be improved upon. I think at some point the mining is gonna get a little out of control because of the arms race between the mining companies, and hopefully the miners will propose some kind of change that can at least slow the growth, just because the hash rate is just exploding. Now, this says not to FUD crypto or not to FUD Bitcoin or proof of work. Just saying that at the rate that the hash rate and the difficulty is increasing, you're outpacing smaller miners to get into the system because the incentive for them is not there because the rewards are more difficult to get. So moving on, we have crypto.com. So as of lately, we've had a lot of layoffs. Obviously, crypto's down, and this is par for the course when it comes to crypto. Over all of the bear markets in history, you see that, and this is no different than any other industry as well. And so, you can look at retail on more of a short-term time window, on a 1-year window, for example. Retail, Walmart, Amazon, they hire during the holiday seasons when there's more business, and then they lay off afterwards. And so, the same could be said here with crypto companies, but Crypto.com lays off 20% of its staff. They said they did not account for FTX collapse. Yeah, I mean, you know what? I actually think they're lying, right? I mean, these exchanges work with each other. You gotta know Crypto.com had some rumors that FTX's leverage was insane, and I don't know. They know more. Like when you work somewhere and you got a job and your coworker is just a binge drinker, alcoholic, just sweating every day. It's because you interact with them, you work with them, you share business with them. You're like essentially you're working in the same industry, and the writing's on the wall, man. And for somebody outside, somebody that just happens to stroll in. Perhaps they didn't know any better, but I think that Crypto.com at least understood the leverage and the risk that they had, and whether or not they knew it was going to implode when it did. That I maybe would agree with, but I don't know, man. Either way, all impacted personnel have been notified, so they're not letting them know through Twitter, which has been a recent trend.
Oh man.
So yeah, that has got to be painful. Like, you check your Twitter feed and you're like, layoffs, and then you're like, oh, I don't have a job. Well, thanks, Twitter. So they did a quote from Crypto.com. So we grew ambitiously at the start of 2020, building an incredible momentum and aligning trajectory with the broader industry. The trajectory changed rapidly with the confluence of negative economic developments. So I think we can all understand what negative economic developments are. Some positive developments, though. We have Cardano. So Cardano's first ever smart contract and Python version demonstrated by devs. Okay, if you have followed Cardano and you know a little bit about what's going on with them, one of the biggest negatives that is said about Cardano, which I've heard over and over again, is that it's hard to write code. It's hard to develop on Cardano because they use the Haskell language now. So Python is one of the easiest coding languages. It is, yeah, it's definitely the go-to for websites as well. Anyways, so a group of Cardano developers demonstrated the smart contracts for this network that have been written in a simple Pythonic programming language. Here's a tweet with a copy of the said code. The first smart contracts of this type have been compiled and deployed in the pre-production testnet of Cardano. Developers added the integration of PyCardano, a lightweight Cardano library written in Python, is going to be the next step in their roadmap. The contracts I tested are cheaper, faster than the Plutus code by a factor of 10. So by a factor of 10 times cheaper and faster. But the sample code is really tiny and does not tell much about the power of the compiler. Now, they're not switching over their code. They're not moving from Haskell and the Plutus Pioneer upgrade to something else. They're not forking. So, guys, it's just more adaptability, and this is good for the ecosystem when it comes to development. As explained by the creators of this novelty, Eopson also allows developers to compile a 100% valid Python 3 code into Cardano smart contracts assembly. This significantly lowers the barriers for entry for the new generation of developers in the Cardano ecosystem. We've seen Cardano's ecosystem exploding. This is definitely one I got on the radar. It has a lot of similarities of Ethereum from the last bull run. So I do think it's a pretty solid bet on the top 10 projects, I think, especially to see where they came from, their rally, and how they survived a bear market. And it looks like they're building in the bear market this time around as well. Then also Polkadot. So Polkadot's dev activity reaches new highs, but Dot's revenue tells a different tale. So Polkadot has been outperforming other cryptocurrencies. Larger here. And so it's outperforming other cryptocurrencies in terms of development activity, according to recent data. However, despite this, generated revenue by Polkadot has been declining. So, my first takeaway, so revenue is dropping in the last 24 hours, but development is growing. So, I would, if you're a fan of Polkadot, I would just take it as, hey, they're building in the bear market. There's not a lot of people piling in on it. And so if you're a fan of Polkadot, I mean, that's exactly what you want. You want the price to stay low so you can accumulate dollar cost average, and you're probably not going to get as much volatility as some of the competitor chains. But you know what? On the long-term time horizon and on the roadmap, Polkadot is making strides, which is good because I haven't heard too much about Polkadot as of lately. So good to see that they're sticking to the roadmap and building.
They just ripped into take profit too for me from a chart standpoint.
Yeah,
I'm happy about it. I mean, you got to think off the lows, it was 53%. Made that yesterday. That's a nice move, man.
Okay, yeah, and I know we'll get into Dot in a moment as well. I know somebody asked about it in the chat here as well. And then a couple other articles, and then we'll get back into it. So we have the BitConnect fraud. So about this, 800 victims of the massive BitConnect fraud that received $17 million in restitution. So a group of crypto fraud victims of BitConnect investment scheme will see some of their money back, 17 million. I'm sure there's gonna be pennies on the dollar, especially if you're to take how much like tokens price was compared to now. But hey, some restitution is good. Now around 800 victims from 40 different countries will receive a small slice of $17 million. So we're starting to see that even though I think we're going to have the same thing happen 3-4 years from now, we're going to be discussing these failures of, say, Celsius, FTX, and I think 3-4 years from now it'll be kind of the same thing, where it's almost a forgotten story. And like, oh, people from Celsius, people from Voyager, people from FTX are finally getting their money back. That seems to be the general timeline. So if you are holding any locked up assets on any of these platforms, if you look at history, you'll see that it is quite some time before you get paid back. And even then, you're only getting pennies on the dollar. Now, MetaMask. This is something I'm pretty bullish about here. So MetaMask, obviously decentralized wallet, so you're not seeing too much upgrades or integrations and things of that nature. Anyways, they're making headlines. MetaMask staking launches, plugging into Lido and Rocket Pool liquid staking. This is big, man. This is really big. What do you think about this? Because it's got to be the number one DeFi wallet, right? I mean, on like that browser based one.
It's definitely the most. It seems like the most used one. Anyone I talk to has a MetaMask wallet. So I personally don't get into DeFi or staking. I know that's really unpopular. I'm just a trader. Been in the space for 2 cycles, but having seen trends come and go, I stayed away from a lot of staking and a lot of that stuff because things like Celsius. I know this is a little different, but it was one of those things where I'm not the most tech savvy when it comes to this thing. Yeah. Do I think it's good for the space that they're improving and like adding things? Yes, I do.
Well, you can easily subvert the centralized companies that offer. So if you have an appetite for staking, you want to stake. It's ideal to not leave it in the hands of an institution and do it yourself. Oh, yeah. And if you're kind of hesitant to stake on chain with Ethereum, it can be a very complex process. I think I would assume that MetaMask makes it easy to do so.
I would say this: now is the time to start looking at staking options due to the valuations of projects. If you guys are considering staking, and this is what I used to tell people that would ask me about it, because they generally, by the time I get questions about staking, it's because the market is just so inflated, it's overdone. I'm like, if you start staking now and you're locking these tokens up, think about where the price might be in 6 months to a year. We could be in a bear market, and hindsight's 2020, obviously, but for a lot of those cases, those guys who were asking me that, at the end of 2021 or middle of 2021. Imagine have been staking these assets, and then it's June of 2022 and Bitcoin's trading at 17.5 and everything's down 90%. And instead of being able to sell the asset, because they're not just staking a little bit of it, they're staking all of it most of the time. They're just like, all right, I got X amount of ETH or I got X amount of whatever. I'm going to stake all of it and it's going to be a great return. It's up only from here. And that's just not the way it works. So staking, I think, is good. I just think you have to time it correctly. If you're going to be like locking things up for an amount of time, and I'm to my knowledge, that's how that works. Is you do have to lock it up, correct? Like you have to choose what time frame you get like a percentage back.
Basically. And Lido and Rocket Pool kind of have different staking parameters, but for the most part, that's how it shapes up. So nothing. I don't really have anything else to cover on this. Just kind of, hey, they're introducing staking. I think for the people that want to get into staking, great option. Better than having Mr. scam artist take it over. And then what else we got? El Salvador. So El Salvador passes landmark crypto bill, paving the way for Bitcoin-backed bonds. So they've been talking about this. They actually scrapped the idea a while ago. So bonds are a way for a country to raise, to lend money, also borrow money, especially in the for El Salvador. And instead of investing straight into the government's economy, you can invest in their Bitcoin-backed bonds, which provide energy from their volcano. So anyway, if you're familiar with with El Salvador, they have thermo-geo volcano energy grid there, and so they're going to plug the Bitcoin network in there. It's green, and it just sounds cool, volcano bond. Sounds like something from a movie. So I think it kind of lends well to the Bitcoin narrative where, hey, we're edgy, we're new technology. Here's a new way of generating energy. We're taking the geothermal energy from a volcano. So kind of cool.
It's like a sacrifice. I love it.
Yeah, and then lastly, I got one more article, and then we're gonna get into some charts again, and then we'll wrap it up. So we got Gary Gensler finds new audience for his crypto skepticism. The U.S. Army.
Good.
So
That's a good. I like that. That's a good line.
yeah, man, this guy. Anyways, United States Security and Exchange Commission Chair Gary Gensler has found a new audience for his crypto skeptic pep talks. The United States Army. So on January 11th, the U.S. Army hosted its first Twitter Spaces event in 2023 with Gensler and the SEC Commissioner Caroline Crenshaw joining the discussion to provide financial advice on how and where U.S. soldiers should invest their money, which is interesting because I was checking this out, and some of the soldiers were like, hey, man, we like crypto, and we're piling into crypto, which then Gary Gensler put his hands in his face and was like, okay, hold on. Let me tell you. This is what I think about crypto. And so, anyways, Sergeant Lawrence Holmes noted that there are soldiers that look for those alternative investments such as crypto, asking the pair what they think about crypto investing. Gensler said it's the Wild West, and also said that most 10,000 or 15,000 tokens will fail. I actually agree with him there. But as far as you know what, I agree. It's kind of the Wild West right now, and I agree.
I actually don't think it's the Wild West anymore, though, because like the laws that apply to a lot of traditional investing platforms apply to crypto. It's just a matter of enforcement, and they don't really have a good way of enforcing it. And I think that's on them. It's like you said, this isn't any fault of crypto. I think this is going to be one of those things where their enforcement and the way they've been tracking things, now they're coming back. We're like, it's just like what you're talking about. Was it Jim and I were there like, no, we were working with you and there were no issues. And now you're telling us there is, after the fact. And so I do think that it's an issue on both sides. I think there's probably a little bit of like, hey, we kind of knew these were the rules and we skated by a little bit. And then there's also the issue with them where we were working with you and you guys had no issue with it. Then why is it an issue now? Like we were relying on you, for this, like we had a committee for it, whatever it may be. So my thing about Gensler is, my only question would be for the chat is who is more hated, SBF or Gensler?
That's
at this point,
one.
like I want to know who do you guys not like more? Do you guys dislike Gensler or do you guys dislike SBF more?
All right. You had to do a top 10 most hated list or most wanted list. Who's at the top of your list? Put a 1 for Gensler, put a 2 for Sam Bankman-Fried, and I'm curious to find out where everyone lies on that one. You know what? I agree with you, but here's what I think it fits into two baskets. I think you have the structure of Bitcoin and also Ethereum that is not the Wild West. It has developers, it has partnerships with real companies out here, and they're building. And you know what? They're secure, they're stable, they have users and adoption, and it's not at this point. Hey, we're just speculating on the price. We're getting in. There's people that genuinely are building, that believe in its in the technology and what it's going to do for the world. So with that said, Bitcoin, Ethereum, I think stand there. You can make the argument or the case for Cardano, maybe even Binance Smart Chain, which has kind of got a black eye as of lately, but maybe even Solana. But you can make an argument for these other cases, but it is kind of like the Wild West. It's everyone's throwing elbows at each other. They're trying to stand out. They're paying to, influencers to talk about their coins. They're out here talking about burn mechanics when it has nothing really relevant other than, hey, we printed way too many at launch, and now we're trying to incentivize people to get in because of a simple burn mechanism. And even though we're not focusing on utility or use case, so yeah, I do think it's a Wild West for majority of the tokens, the 10 to 15,000, as he says, and then the cream will rise to the top, and I think we have that in Bitcoin and Ethereum. Speaking of Bitcoin, one interesting thing I did find here on our Twitter. So this is at Texas A&M University. The largest school in the United States by a number of students has added Bitcoin protocol to its class this spring. So if you want to learn about, obviously, almost every major university offers classes on finance, and why, if you're going to offer classes on finance, why not have alternative financial classes that are outside of the norm, cryptocurrency, obviously, or I'd like to see more integration of Bitcoin as at least something that you research, even if you don't agree with it. Let's discuss it. Even if you're going to just straight bash it, it should be part of the curriculum. Let's bring it up for open debate.
I would be curious to see what's in that curriculum too. Like, is it going to be the theory behind it? You know, kind of like we're talking about, like what Bitcoin stands for, or is it just the protocol and like, all right, this is how this works on blockchain. You know, this is how you do cryptocurrencies, or like, you know, how they're built. Hopefully, it's a little bit of both. I think that's one thing that is lacking, is like the monetary, you know, policy type of discussions on this from like real universities and people that are credible, I guess. Because as you said earlier and alluded to, like with Congress, like these guys don't know what they're talking about half the time when crypto comes up. They're just expected to like speak on it. And so they just give a bland opinion, or like a negative one, because they don't understand it. That's why they need that committee. But classes like this ideally help, you know?
Yeah, you know, I would hope they stick to the facts and then let people draw on their own opinions. And obviously, you know, the facts are going to lean more bias and, you know, one direction or another, but at least try to fill facts from both sides of the aisle. I do think that it, you know, as we kind of alluded to earlier in the show, you know, the consensus mechanism for Bitcoin with the proof of work is a very hot topic, and you know, arguments should be made on both sides, and you know, discuss proof of stake, not just Bitcoin. I think you should expand it to more cryptocurrency and blockchain, and outside of just Bitcoin. But hey, start with Bitcoin, and then we'll go from there. All right, we do have Fino gave a $1.99 super chat. He says, "Do Compound Finance TA, please." Also, he has been a member with Sin City Crypto for 4 months. So big shout out to Fino there. Also, let me just go down the list before we get into the chart. We do have OC Pet Doctor, Frank, DJ Haas, Toronto, Scallywag, Juan, J-Bon, Grimes, Colin McDonald, Purple Stuff, Cassius Cuvée up in here. I was hanging out with Cassius Cuvée last weekend. Super cool dude. Poppin' Crypto is his channel. Guys, go check it out. He does a bunch of cool rap songs, and he's gonna do one for us as well. We're an outro. So, and some of the requested tokens. So we got the Compound, we got Atom, Link, ICP, and Soul. I know I've seen a bunch of Cardanos in here. I'll let you kind of pick which ones you want to go through. So if any of those stand
We're on
out.
Comp right now. I went ahead and just pulled it up because why not? I've never looked at this chart before, so just so you're aware.
You know what? I have there's a guy in the chat here. He's one of my buddies. And the first thing we talked about when it came to crypto was the first thing he said. He's like, "Hey, man, I bought a lot of Compound." And I'm like, "Compound, huh?" I'm like, "You went all in on Compound?" He's like, "Yeah." That was like at the height of the. He was like, "Is it coming back?" He was like, "Is it coming back?" I was like, So, anyways, he's actually in the chat today. So,
yeah, I got a buddy like that went on like Cat Girl, and it did not go well.
I will say that, you know, Compound, it is very similar to Aave, you know, where you do it's like a lending protocol. So, yeah, I mean, I like what it has. So, anyways, yeah, what's the Compound chart? Tell me.
So this is your yearly chart, which actually it's got more history than I was expecting. It's on its 4th year, so this is going to give us enough to work off of. Unfortunately, you are in what I call price discovery to the downside because you've made new lows. You can see this is your low right here, and you're already living below it. So important just to mark out where the yearly open was, the yearly high, right? I like to mark the highs and lows in white. So if you ever see a chart of mine, you'll notice that they are in white. So I'm just going to put the 12M high, and then we're going to mark the.
Real quick, when you're pulling up a token that you're not too familiar with, you start with the yearly chart, just to kind
yeah. I mean, I want to know. I want to know the most macro levels first, and then I'll dial it in as I go. But I get through this pretty quick, so it shouldn't take us too long. This is going to be a really important low right here. So right here at $81, is that 80? No, 61.85. Excuse me. This is the low from its inception. So from 2020. And you're going to want to see this level reclaimed. And we'll get into it on the low time frame here in a second. But you can see straight away, you're going to be able to use this as like a trigger almost. You're going to say, okay, now I've seen a sign of strength potentially, and my invalidation now becomes the low, and I'm looking to hold this as support and maybe rally up. So as we're going through, you'll notice here again, 2021, what did you do? You took the high in 2022 and closed below it. So we are going to mark this as the 2021 SFP, means swing failure pattern. You've swung above the level and closed below. There are several types of swing failure patterns. This is just the most common one that I like to use. And it offers up some decent like support and resistance as you go. So then I move into the 6-month chart. I know we're not moving too quickly on that, but it's just going to give us some levels here, right? That's all we're doing is we're looking for levels. You can use the opens, you can use the highs, whatever your preference is. I prefer to use like quarterly opens, yearly opens. Sometimes you'll go down to as low as like a monthly or a weekly, but the opens are generally what you want to see. And you just want to pick out the ones that are the most important. Like this was an important open. Why? Because people are trapped above this level. So you want to see it moving down, right? So that's why this level matters. This one, not so much. Go to the quarterly. And as we get this, we'll start, you can already see even the quarterlies respecting this 2021 SFP. So you can see this is a pretty important level and it's really far away. So it's not that important to us just yet, but in the future it might be. So you just keep it marked and you just move through. Very, very simple, And so what you'll notice here is that you have been trying to get back above 61.85 for 1, 2, 3, 4, 5, 6, 7, going on your 8th month. Right? And you're trading at 52.67. So straight away, I know that if we reclaim 61.85, which this is where it looks like it's going, is 61.85 to be tapped. You get back above that level and start closing and opening monthly candles above here, maybe even weekly. If you're, even weekly candles. This is going to be a nice double bottom area, right? And then you're just looking to target these local highs at that point. You're looking for a decent size run up. You can do anything from basic things like fibs, right? You can pull volume, whatever is suiting you best. One thing I like to do is like standard pulls, right? You can see now that this is your 236 as well, which is, a major fib. I prefer to stick with the golden. So I have like a template just for that. I'm gonna turn on the 50% though for Dow's theory, and then just move this over and say, okay, straight away, if we get back above this, I do expect to see $82. And then I want to see this still holding on to 61.85. Like if it came up to $82 and then came all the way back down below 61.85, you can see how that looks like a false breakout. So if you did something like this, not good, right? But if you get back above this level and it becomes support, this is a very good entry point. Or if it came back up and just back test before here, another good entry point. Why? Because you have invalidation, meaning you have a place to put your stop loss so that you're not just holding on to this going, man, I hope this goes my way. But I understand that's not feasible for everyone. So if you're investing, a good sign is to reclaim this level. But if you start losing it, that's a bad sign. You want to say, okay, maybe I cut some of that position. You don't have to cut all of it, but maybe kind of hedge against the downside risk at that point in whatever fashion suits you. But immediately I'd be looking up to like this $100 level. It seems like a psychological number. You can see that you've got some lows in this area. I would be looking to just stair step out of this position. Now, the really bullish take on this would be a full recovery of your yearly open at $200. And that would put you above these local highs and then set in the idea that this could be a larger range, which could lead to accumulation. So I would expect on this one that if the market is like putting in a major bottom here, which we have signs that it's starting to, that you're going to get a really nice rally out of this. And I mean, you could see $200 again. However, I would also expect to see a larger range being put in here. So I think this is a good place to be accumulating once you start recovering this level. And I would expect a larger range, and it's going to come down to patience. You're going to want to sell up here, buy down here. Or if you're looking to accumulate, you would just, very simply go, okay, if I think I have a larger range in place, what I'm going to do is I'm going to take a channel or the Fibonacci tool, and I'm really looking to say if my range is looking like this, and I'll add some color to this so that you guys can see what I'm talking about.
And then just a little insight on the current price. It's at $52, up 35%. So big rally on this one for the last 24 hours. Sitting at number 87 on the CoinMarketCap list, so it's pretty far down there.
It's a top 100 token. Nice.
Yeah, it is a top 100. I remember it when it was at $200, and it was higher up on the market cap list. So definitely has lost some traction against some of the other top projects. But
That's to be expected with alts right now. A lot of alts, it's tough sledding for alts when the bear market comes, to be honest with you, because they get slaughtered compared to Bitcoin and now Ethereum. But let's just use this local high here. Let's just say this is our local high at like $171. So close to 200, that yearly open, right? And what you're looking at here is potentially a range. And this is going to be your 50% mark that we just looked at, right around 100. If I was accumulating and saying, okay, this is going to be an accumulation range, and I think that this is going to be bullish, I would like to be accumulating in the bottom half of this and then cutting maybe some of that risk up here as I'm reaching this resistance, right? And then I want to be reaccumulating below this line because we want to do what? We want to buy low and sell high, right? So just in a very simple terms, you can see how that's going to set you up for success. Now, could this just moon straight out of here and you never get to buy again down here? Yeah, so that's why you take some profits here. You leave some of the position that you've already accumulated because you believe that over time you're going to get to reap higher rewards. And you don't put all your eggs in one basket. That way, if it did something like that, if it did just come up to the highs of the range, do something like this, pull back, and then keep going, you still have exposure to the asset, but you also locked in profits, and it's a very risk-free position for you at that point. And then you have capital freed up to, one, pay yourself, or two, put into something else that maybe you're interested in, or wait for the pullback and reinvest. But I think the more likely scenario is, especially if you can recover 61.85, that would be the very first sign for me that I would want to see if I was an investor. Once it's back above this level, I'd want to see I'd want to see a little bit of like structure being put in. I think it's going to take some time. You can see that you've got a fairly large, what I'll call the global range, meaning all price action, right? With your VPVR, and that this is also the point of control for all price action. So the most volume in this asset's history has been done right here around this 61.85 level, this local low from 2020. So recovering this level is a good thing. Holding on to this is a very good thing. If you're trading above this, you're trading above the area of the highest amount of volume, you can start looking towards ranges and auctioning it higher. Now, does that mean it's going to rip all the way back up to the value area high here at 287? Probably not, in my opinion, but it sets up the thesis that we were just talking about, that we want to be accumulating down here in this region. That's where that starts to become valid. And you go, okay, I want to be accumulating in this area, and then I want to be maybe taking some profits here. And then if I get the opportunity, reinvesting again down here, because then you start compounding your position a little bit and you're getting gains without really doing, it's very passive. Yeah, I would say passive, because all you got to do is set alerts. You set an alert right here. You can just say, okay, I want an alert right here. This is an arbitrary number. It's just up here. That's why I chose it. And you can see the alerts there. It'll go straight to your phone, whatever you want. You can customize it however you'd like, It's pretty easy at that point. So I'm going to go ahead and delete it. You can also do something like this. Let's say that you're like, well, it hasn't crossed that line yet, so I'm not there. You can right click the line that you selected. You can add an alert to that. So as soon as this asset crosses 61.85, you're going to know. And then you can start looking at positions, or maybe you're taking positions early, or as your friend is already taken positions, right? So that's what you want to do with something like this. And this is, I'm trying to give you guys kind of a broader term look. But also a short term, like, okay, this would be how I would attack this from a strategy wise, because we're still hedging for downside, because we know that if this does get rejected here and roll back, that, well, you've been making lower lows and lower highs. There's no reason it won't make another lower low, right? So you don't want to be holding in that instance. However, you start reclaiming this, things look pretty good. You could start seeing some major upside. And this one came down pretty hard, to be honest with you, just looking at it. So, when the market does recover, these projects that are useful and not scams, I guess is what I'll say, they are going to recover quite, altcoins wise. I think they'll recover quite quickly, in the sense that you're going to get these big moves up, like you did right here on this bounce. And those can be very lucrative. Even these little ones right here, very, very lucrative if you time them correctly. Like the low to high on this, not that you're going to sell the exact low and high, but 87%. There's definitely money to be made somewhere in this move if you're prepared, right? So that's what I've got on compound in like the very short amount of time we can look at it.
What do you think about ICP? So that was one of them, and
yeah,
I know it's
a common asked one.
It doesn't have the history, so for me, I'm kind of like thinking like, hey, is it, what do you do when a token doesn't have really history or price history? It just came out overvalued, and now it is what it is.
Yeah, this is a rough one. This is a really rough chart, I'm gonna be honest with you. And I know that why people like ICP. You can see I've looked at it before. I have things in my object tree. I used to track this one because I was looking for a time to buy it, because there's a guy, his name is Daniel ICP on Twitter and TikTok. He's got several 100,000 followers on TikTok, and I think he's got close to 20 now on YouTube. Really great guest if you guys ever want to have someone on that like knows ICP in and out. And I think he actually codes on their blockchain, or with Dfinity. He's got a job with them now, so very knowledgeable. And he got me interested in it because he's like, the tech is great, and I was just looking for an entry, and I just never could find.
Isn't this like the definition of trying to catch a falling knife, right?
Yes. Yeah. That's why I could never find an entry. This was like, never gave me a position where I was like, man, I'm interested. Cause like, it's just like you were saying, like there's nothing here to set up on. Like that other one had that low from 20 that can give us a really nice trigger. This one doesn't have it. You look at this and the market structure is just straight down.
So,
right?
So for me, I'm like, you would probably want to just wait for it to trade sideways for, like 3 months or something, right? And then maybe you would expect that to be the bottom, right? Of some sort.
Yeah, you'd want to see something like this, maybe, off of like this night. You clearly started setting up a range right here, which first time you've done that, right, in a while. So if we look at all these other bounces, they all look the same. One thing that does look different here, though, is you now have multiple touches here at about $9.80. Okay, so we can see here and we can see here, right? So if price is returning to this level, you're going to start really setting in the potential for a range here. And if you break through it, I think that 16.7 and then maybe even this high up here around what is that, like 22.65 is on the table, but not until you're above $9.80. You could trade this on like on a day trading type thing with like these local ranges and levels. But for me, yeah, $9.80 on ICP. Otherwise it hasn't done anything just yet. Now, if you were like, I think this guy is wrong and I believe this is the bottom, here's your invalidation for that right here. You've swept the lows, right? You haven't done that yet. You haven't taken any real lows and then reclaimed them in terms of an actual swing failure pattern until here, which I guess you kind of could make an argument for here, but you did here. But what did you do once you gave it up? You made a new low, back tested it, made another low. The reason this is important to note is that let's say that you bought here, or you're buying here, you already did, whatever. This low is now your invalidation, meaning that this is where your stop loss would go from a technicals perspective, below $3.49. That would be, I need to get out because this is going to make potentially a brand new low. And that could lead to price discovery to the downside. And I know it's only at 349, so how much lower can it go? But if it goes to $2, you've lost damn near 50% of your position if you bought the exact low. If you didn't and you bought up here, you've definitely lost 50% or more. And maybe you don't care about that stuff, but to me as a trader, that's my take on it. So there is a risk in place, where meaning you could justify risk if you were working out the model on it. You've got a stop loss, so you could justify what percentage risk you want, like meaning that if you got stopped out, you'd only lose 1, 2, 3% of your portfolio or whatever it may be. But to me, I'm really not interested till I see a little more on this one. And I know that's not a popular opinion. That's not what you guys want to hear, but
yeah,
you're going to want to see ICP with something that's drawn down this hard. And you really hit it on the head. It's kind of like catching falling. You want to see that structure. Yeah. You don't want to be guessing and just going, all right, I'm just going to YOLO in it, $7.
The thing is like you gotta think like the bull market is not around the corner. Now we might have hit the bottom. We might have a bear trap or whatever it is. But realistically, we're not gonna go into that parabolic bull run, giant rally where everything's going up 10, 50, 100x. That's not coming, and so you have time for something that is pretty new in the game to evaluate like what is real solid support and what's a good value. So that's kind of my takeaway when it comes to ICP. I'm actually a big fan of ICP. I haven't bought it yet. I keep looking at it and I'm just like, I don't see any. Yeah, I don't see any value, or I don't feel comfortable buying it right now because I just, like you said, man, it's like I don't know when it's gonna stop falling. All right, so real quick, I'll let you pick one of these and then we'll kind of wrap it up after that. But we got Atom, Chainlink, so Cosmos, Chainlink, Solana, Cardano, and then let me just scroll through, see who else is yeah, I know there was some other ones. Sorry guys if I didn't put it out there. So we got Cardano.
Atom has actually hit Atom's hit a major target for me. So I've been tracking Atom pretty closely. This is one that I buy. So this was a Gartley that panned out, and shout out to Tom Crown. I was looking for this to complete into the value area low, obviously a little bit deeper here. Technically, it does complete at the 0.75. he called out that it was touching the 200 moving average. I can't remember what time frame, might have been the 4 hour, and was looking for the Gartley to complete here early, and he nailed it. Absolutely nailed it. I didn't get the entry I wanted because of it, because I was being patient and did not pan out, obviously. But you've broken through this structural support, and I'll get rid of this real quick. We just don't need it anymore. Right here, you can see this is going to be your B leg, meaning that this is the range that had formed above before it expanded to the downside. And now you've recovered it, and you've moved into the gold pocket, which is also going to be that fixed range we were just looking at, the value area high of this structure, right? So this is resistance for now, and this is just the C down to the D leg here. That's all this is the golden pocket of that and the value area high. So it's a take profit for me. Realistically, I think this is the low for Adam. I was fortunate enough to get the trade this low. This was a really nice catch. This is what we had marked out for the low on it, and immediate bounce back up to what the 6-month average at 16.45, almost to the dollar. So got to take some profits, and then was looking to reaccumulate closer to $7.56. It just didn't quite make it all the way down there. So, sometimes that's the way it goes in trading though. But in reality, if you wanted this thing to moon any harder, 16.45 is obviously a target. And there's more to it than just, pulling your fibs and your volume. You could look for trend, and you could go, okay, when does the trend become very real on this? And you could use a fib tool for that, right? So if you're just pulling standard fibs, it's different. But for this one, you're just going to use a trend-based tool from the X to the A to the D, and that's just the accumulation that you've just seen. You can see there's your local gold pocket utilizing these highs and this backed up by the 6-month average into the 1-to-1. And this 1-to-1 is really important because this is an untapped average from the second half of 2022. And it's hard to tell because this is extended, but it's also your untapped yearly average for this year. So what you're going to want to see is if this were to make a 1-to-1 move from this structure, you're going to want to see it recover about $20 flat. And if you can do that, you can start to already kind of picture where it's putting you. And so just using fibs and a little bit of math, there is the range you've got to get back into. And you break back into this range and probably heading to like $27 and then some, but that's a different story. I don't think we'll see that move anytime soon. But if someone was looking at this is resistance. I would be cautious right here. I'm not looking to buy into resistance. I would wait to see if we get a pullback maybe into this box again, right? So this box is right here. All it is this wick low and these candles, right? So that's all you've done is you've identified the pivot point of the structure. And that box comes in between 11.29 and 10.55. So you'd want to see about $10.50 holding, and you can see how this is also your breakout point locally, right? So you can see how price is just butting up against it. So you want to see this level holding as support, and if so, this could be a good place to get a secondary entry if the market is supporting a further move up, which has kind of been the thesis on Bitcoin. Like, we're still expecting to see higher prices until proven otherwise, and I think that carries across with alts, so that's a really easy one. And then Polkadot's another one that's in resistance. So this is another one where I got to buy the low really well. Same with Algorand. Was looking for this first box, which provided almost no resistance. You can see on the 4-hour it did, but realistically, you've come all the way back up to your local golden pocket. And again, you're using your high time frames. This is the 2021 low and your 2022 from last year. This was your NPOC, or your naked point of control, from the entire session of last year. Which is a big area to get back above. So this is the most volume traded for all of last year, and it stands to be resistance, right? And it makes sense. So I'm going to go ahead and delete that off there because it's just no longer needed. And this is going to be resistance. If you pull back again, we're just doing this level to level. You're going to want to see this old support right here continue to be support. That's also going to be your quarterly pivot, or the average of price coming into this quarter. So if you're trading above the average and the average is support, buyers come in and support that. However, you start trading below it, well, you look back to the lows, unfortunately. And for me, this had support all the way down to 376. I just didn't know that we were going to see it. So that's why I started accumulating in this box right here. And it's up 53%. It's reached resistance. I would be patient on this one. It may just blast through this, who knows, but I doubt it. I don't typically advise anyone to ever buy into resistance. Now, if it puts in a flag here and you're playing the pattern trading game, go for it. That's all you guys. But I'm big on DOT. DOT's one of my biggest altcoin holdings. Ethereum, Chainlink, Polkadot, Atom Cosmos. I hold some QNT. Algorand is one that I've been picking up because I did videos on Algorand back before the 2021 bull run. And I was calling for the breakout on it at like 27 cents on my old channel. and it came all the way back into this macro accumulation zone. So I've been posting about this zone for almost a year to get down into this box, and I've had to wait. And so this is where I was looking to accumulate between 15 cents and 21.68. So realistically, you need to see about 31 to 33 cents reclaimed, this area on the chart. And if you do, I think you've got to move to 40 and then 50 cents on your hands pretty easily. And that's a really nice trade in a bear market. But I do think that because it went all the way up here and spent all this time up here and then came back to the lows, I mean, granted, it's already been in this window of accumulation, in my opinion, this like lower bounds. And I know this is a messy chart, so I do apologize, guys, but this lower box accumulation window is what I call it. I would expect to spend some time down here. You spent, what is this, from August 2019 all the way over to here in January of 2021. So that's well over a year and a half. You may see something similar where you spend 12, 18 months down in this region, which if you're a DCA type of person, that is what you want to hear. You're like, I'm going to be able to accumulate more, right? Just make sure you're diversified and you're not all in on one project. That's all I'll say. Because you guys are hearing me talk about multiple projects, and some of these do completely different things. I don't get as much into the fundamentals, but I do believe there will be winners and losers in this, this space. But I'm also here to make money, and I think that these offer the best risk reward. They've got good communities behind them. They seem to be legitimate projects, and I think that the upside when we do turn back around is going to be really good. So to me, Algorand made sense to start accumulating down here. Once it cracks 30 cents, I think that you're going to see maybe as high as 50 cents and then maybe back down and we start accumulating again. So similar to what you saw here, you did get one big wick out of it, obviously, but came right back to it and then up it went. So really nice accumulation range. I'd like to see something similar on this side. And then we go to back test some old resistances and supports, right?
Cool. Hey man, I haven't looked at.
Sorry, I wanted to roll through a couple.
No, I haven't looked at Polkadot long enough, or I haven't looked at it lately. So, well, we're running out of time here, so I do want to give a little chat here, or a little shout out to the chat. We got Crypto Chef, OC Pet Doctor, So Gucci. We got Mike Play, Gary, We Are S. We got Vegas, Dione Gang, and Johnny Jackhammer up in the chat. So to all of you, hola, welcome. We got Cassius Cuvée in the chat. I do want to say we did record a video earlier this week, which should be published next week at some point. A little one-to-one with me and Cassius, so if you guys want to learn a little bit more about him and just a little back and forth. We've seen these before. It's like a one-on-one interview when we have people in the studio. So watch out for that next week. And then, Magic, is there anything on your horizon or anything going on in your world that you might want to talk about or discuss?
Nah, man, it's, me. I just kind of take it day by day. I just chill, trade, chart, and I enjoy what I do. So it's every day's a good day, I guess. That's it. We just go live and talk about Magic internet money. That's it.
There it is. All right. Well, we do have Magic's info down in the description of the chat. So make sure you check out his channel, subscribe, and yeah, man, you got some badass TA, so we always appreciate it. The community loves you as well. It's always a pleasure. And you know what, man? The more Bitcoin breaks out and the more that we start putting in these higher numbers, 20K, 25K's next, 30K's after that, the more and more we do these, the more and more we'll have these impromptu discussions and emergency streams. I'm excited to have them. So then we'll set your date. As soon as Bitcoin hits 25K, we're gonna have another one in the middle of the night or in the weekend or whatever it is. So, anyways, thank you so much, guys, for tuning in. Much love. Thank you for all the likes. We crossed 118 likes, so that's pretty good. I know a lot of you are just kind of jumping in and out, but so till next time, we'll see you guys on Monday at our live show in studio, 10:30 a.m. Vegas time. We do got Magic coming in on our FOMC special, which will be February 1st, I believe. So we're excited to have you there as well. So, all right, guys, we're gonna wrap it up. Y'all have a great night and a good weekend. Go football playoffs start today, so excited for that. So,
oh yeah,
you watching?
See who the Chiefs are playing next week.
Yeah.
Oh man, you I'm the Chiefs
you're a
fan,
Chiefs
so yeah,
fan,
yeah.
huh? Yeah, well,
I
you know,
know.
Raiders aren't even in the picture, so it doesn't even,
You guys are parting ways with Derek Carr. You know what? It's
yeah.
only up from here for you guys.
Yeah, maybe Tom Brady's on the list. Who knows? All right. Well, we'll catch up with you guys later. Thanks so much, and have a great night. Finger tornado. I don't have any outro sounds, so there you go. All right.